Have you ever looked at your bank account and thought, I'm saving money, so why does it feel like I'm getting nowhere? You're not alone. What most people don't realize is that their money is losing value. Even while it just sits there, it's not your imagination, it's inflation. And it's quietly erasing your financial progress year after year. I'm Tone, and in this video, I'll break down how inflation really works, why it's happening now, and how you can flip the script, not just to protect your money, but to grow it even when prices keep going up. Think of your savings like an ice cube. When you first take it out of the freezer, it's solid, it looks like it's holding its shape. You put it on the counter, you walk away, and when you come back 20 minutes later, half of it's gone. Not because you spent it, but because it melted. That's what inflation does to your money. Even it looks like the same in your account. $1,000 still $1,000. Its real value, what it can buy, is shrinking every single day. Inflation is like a heat. It's invisible, it doesn't feel dangerous at first, but over time, it melts your financial stability without you noticing it until it's too late. So what is inflation? Inflation is the gradual increase in the cost of goods and services over time. And that sounds harmless until you realize that your income and savings aren't keeping up. In other words, prices go up, but your paycheck doesn't. A $2 burger in the early 2000s now costs $10. Gas, which was $2.30 a gallon back in 2016, is now over $3.50 and has even spiked above $5 in recent years. A dozen eggs used to cost $1.50, now nearly $4 in some places. But here's the kicker. Most of us don't feel the pain all at once. It's slow, steady, and sneaky. That's why it's so dangerous. Let's get real. Let's say you've got $10,000 saved in your bank. You don't touch it. It just sits there for the next 10 years. If inflation averages 3% a year, and that's conservative estimate, your money's purchasing power drops to around $7,400 over a decade. That's like someone's taking $2,600 from you while you weren't looking. Now imagine that happening every 10 years of your life. That's not just a small leak, that's a flood draining in your future. So what's behind inflation? Why does it keep happening? There are three major drivers. One, demand pull inflation. This happens when more people want to buy stuff, but there isn't enough supply to go around. Too much money chasing too few products. Think about what happened during the pandemic with the toilet paper, electronics, even cars. Prices jumped because supply couldn't keep up. Second, cost push inflation. This is when the cost of producing goods rises. So companies raise their prices to cover those costs. Maybe the raw materials got more expensive, or there's a shortage of workers. 3. Built-in inflation. This is the cycle where workers demand higher wages due to rising prices, and then businesses raise prices again to cover the higher wages. It's a loop that keeps feeding itself. And when all three of these hit at once, like during the pandemic, you get a perfect storm. Governments printing money, supply chains breaking, and demand bouncing back fast all at the same time. We're not the first to deal with inflation, and we're definitely not the worst. In Zimbabwe, inflation hit 89.76 trillion percent. That's a number with 21 zeros. People had to carry stacks of cash just to buy a loaf of bread. In Venezuela, from 2016 to 2019, prices increased by over 50 million percent. A simple cup of coffee went from a few bolivars to over 2 million. These are extreme cases, yes, but they show us what happens when inflation gets completely out of control. It doesn't just affect prices, it breaks economies. It breaks trust in money itself. While we're not anywhere near that level, the signs are worth paying attention to. The biggest mistake people make is thinking that saving money is enough. It's not. Traditional savings accounts barely pay 1% interest, if that. Meanwhile, inflation is 3%, 5%, sometimes more. That means your money is melting faster than it's growing. Imagine saving for years only to realize you're farther behind than when you started. It's not your fault. This is what we're taught. Save money, don't take risk, keep it safe in the bank, but that advice doesn't work in today's economy. Now let's flip the script. Here are the simple ways to protect yourself from inflation and actually build wealth while others are falling behind. Number 1, use a high yield savings account. These accounts pay much higher interest than regular ones, often 4% or more. That means your money at least keeps pace with inflation. It's a good place for your emergency fund or short-term savings. Second, start investing, especially in index funds or ETFs. You don't have to be an expert. Index funds like the S&P 500 historically returned about 10% per year, even after inflation. That's a solid growth. Because they are diversified, they are less risky than picking individual stocks. 3, hedge with inflation-resistant assets. Commodities like Bitcoin, gold, silver tend to hold their value when inflation rises. Real estate too can be a powerful tool, not just because it appreciates, but because rent often increase with inflation. The point is, you don't need a complex plan. You just need to stop doing what's not working and start doing what actually protects your money. Inflation isn't going away. It's baked into the system, but that doesn't mean you're powerless. The truth is, you can't save your way to wealth anymore. You have to invest your way there, to learn your way there. Your money needs to grow faster than inflation melts it. That's how you get ahead, not just to survive, but actually thrive in the world where prices keeps rising. Take one small step today. Check your savings account. Learn one new thing about investing. Just start moving in the right direction. Because the longer you wait, the smaller the ice cube gets. I'm Tone. Thanks for watching. Keep learning, keep building, and stay financially sharp.